Hello and welcome. You all are watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. On this special edition, I'm joined by Anand Adhikari. He's the managing editor of the Business Today magazine. Also joining in is Krishna Gopalan, the executive editor of the Business Today magazine. And with me here in the studio is also Surabhi, the economy editor of Business Today magazine. Welcome to all three of you and good to have you back on this edition of BTS. And now to showcase a glimpse of what this edition looks like, the issue has Zomato's co-founder, Deepinder Goyal right there on the cover, and it's the cover story is all about the company's fiery run on the path to profitability. But that's not all. This issue has enough and much more for you as readers and viewers to really consume. There's a special report on mutual funds. There is an exclusive interaction that our business editors really had with the Finance Minister Nirmala Sitharaman. And of course, apart from this, we have coverage on the PTM big crisis issue as well. And of course, there is the BTC for consumer index survey that Surabhi is going to tell all us about as to what this confidence index will show us for this December quarter. A lot more to be discussed. So, but let me kickstart this discussion with Krishna first, because that's all about Zomato that he's written. It's the cover story. Krishna, I want to understand from you, as far as Zomato is concerned, we are talking on a day when Zomato's shares have been on an upward run. It's nearing their all-time high levels. There are brokerage houses reports that are now turning positive. We had the earnings go by that again showed us that, there is a, promising future when it comes to profitability. But tell me, how has Zomato been able to do all of this and what's the future? That's what we will discuss. So first on the Blinkit factor, how has Blinkit buyout really helped Zomato turn things around for itself?
Yes, thank you very much, Sakshi. At the outset, Blinkit is really a quick commerce story. And one is really speaking of a 10-minute delivery. Something which was somewhat new to India. The strategic advantage that Zomato brings to the table is that because of the food delivery business, they understand the delivery network very well. So they put that to good use with Blinkit. So what Blinkit really does is it brings to the table a hyperlocal model. So it could be just within a circumference of X number of kilometers. And then they have the dark stores. So they become the back end. And so the dark stores become the source of the products, and they replenish 3 to 4 times a day. And with that, they have the ability to service the local consumer. I'm using hyperlocal and local pretty synonymously in this case. It is important because Zomato is fundamentally the consumer business. So if the food delivery business was pretty straightforward, where the food came from the restaurant and they knew the end customer, and Zomato therefore became the person who actually brought the food to the home of the consumer. In the case of Blinkit, the manufacturers will send their products to Zomato's dark stores and from there to the consumer. So the moment you have the consumer within your control, you're able to gauge his or her needs. So I for example, will know the food preferences. I will know, for example, what kind of provisions are being ordered and stuff like that. I just want to get back to the quick commerce 10-minute delivery for one thing. Interestingly enough, it's a concept that came from the West, but was adapted in the Indian scenario, because we as a nation, there are people who live very well in India, but the concept of stocking large quantity is somewhat unknown in the country. We still buy to serve our daily, at best our weekly needs. So that's where the quick commerce 10-minute delivery fits in perfectly with Zomato's strategic plan as far as aligning itself with the food delivery business is concerned.
Okay, even now the food delivery business, Krishna, contributes the most to the revenues, but the other businesses are slowly and gradually upping their share. Do you see this shift now going to become a stark shift when we look into the future?
Yes, without a doubt. In fact, I'm just going to cut to FY22, where the food delivery business was upwards of 80% in terms of contribution to top line. That's dropped to 65% post the buyout of Blinkit. And Deepinder Goyal, the very, very reticent co-founder, and in all honesty, I think it was a pretty big thing for us to get him, because we met him over an hour. We met the other top officials as well, including Albinder Dinsa, the the man who was actually behind Grofers, which eventually became Blinkit. So the ticket value for Blinkit may not be very large, but there's potential. And Dipinder himself said that Blinkit will become larger than Zomato in 1/10 at a time. So we are speaking of numbers really zooming. I just want to add a point here. The hyper pure business, which is B2B, where restaurants order stuff from the farmers, could be fruits and vegetables and stuff like that. That is the silent warrior. So you're going to hear a lot more about that because the whole farm to fork model is still a little unstructured in India. And Dipinder Goel obviously has tasted blood on that one. So though the revenue proportion is not very large there, I'm reasonably sure there's going to be a pretty serious amount of action in the time to come.
Wow, wonderful. That's as far as the Hyperpure and the Blinkit focus is concerned. Slowly but gradually there is going to be a shift when it comes to the revenues that the government, that the company has been garnering, and that's going to shift from the large portion that food delivery really has when it comes to the contribution to the overall revenues to these new businesses at large as well. On the path to profitability, is it sustainable? Is it promising? What does it show, Krishna?
The advantage is once you have a consumer within your control, your ability to offer a gamut of services to the same consumer base is enhanced. And as the management said to us, the consumer base as we speak is 30 to 40 million. So for me to have a clear structure where the costs are absorbed, operating leverage is what they call it, which is basically the ability to absorb a large proportion of fixed costs. So if I'm going to be servicing the same set of consumers or let's say a delta set of consumers with the same model, then the ability to remain profitable is much higher. This has been a difficult journey, and I think the fact that they've had 3/4 of a profit is encouraging. And just to get back to what you said to us initially, from a level of cynicism where people were saying, oh, this stock is not really going to do too well. I mean, just to digress, in a rated manner, the Zomato stock had actually tanked by 1/3 when the Blinkit acquisition took place. So they really put their necks out. And today, if you look at the way Blinkit has turned out or look at the way the stock has performed, the path to profitability looks a lot more robust as it was perhaps compared to about 18 months ago.
Okay, well, that's a very, very interesting read, which I'm sure all the viewers will really enjoy. All those people who do order on a frequent basis, like, every day from Zomato, the way it's going forward as far as the business is concerned, and of course for the shareholders and investors at large, it'll be a very important takeaway to read through all of these developments because it's exclusively from Dipinder Goel's interview that Krishna has taken. Thanks a lot, Krishna, for that. Let me now come to Anand. As far as the digital payments ecosystem is concerned, that's where our focus is in this edition, especially NPCI. And now, after conquering the Indian market, the National Payments Corporation of India has now set its sight on the challenging global payments giants MasterCard and Visa. Plus, it's making a big play in the global remittances space as well. Of course, the thing that a lot of viewers and readers would have got related to is that UPI payments now getting accepted at Eiffel Tower as well. That was something that a lot of people out there expected. Anand, to you, NPCI has been in the spotlight for achieving 10 billion plus transactions per month in UPI or QR code-led payments. It's also making a global debut, which, like I mentioned, it's the Eiffel Tower accepting payments from UPI-powered apps in Europe. Could you elaborate on the significant impact of the UPI in payments landscape that's making?
UPI has achieved a big milestone of achieving 10 billion transaction a month. And let me put things in perspective for viewers. This 10 billion transaction a month translate into a market share of 20% in the total digital, all the retail payments in India. And UPI is fast, is eating into the share of NEFT. 7 years back, NEFT was around 56% of total digital payment. It has gone down to 53%. The check-based payment, which was around 35-36%, 7 years back, has gone down to around 10 to 12%. So it's fast eating into the check-based payment, the paper, payments. And third, even the debit and credit card. Debit and credit card, transaction volume was anyway very low, less than 2%. But again, UPI has made a big dent on the debit side, of the transaction. And I was just, when I was interacting with the management of, NPCI, the kind of ambitious target they have set now from 10 billion a month, they are targeting 1 billion a day. Now, if you have 1 billion a day, that will take you to some around 30 billions a month. So from 10 billion, the big jump to 30 billion a month will happen in the next 2 to 3 years. And 30 billion, if you multiply by 12, let's say 360 billion transaction a year. And I was just looking at some data of Visa and Mastercard. Visa does around 220 billion a year. Mastercard is around 170, and UPI is already 150. So in the next 1 year, you will see UPI surpassing the volumes of Mastercard, and in the next 2 to 3 years, UPI will surpass the combined volume of Mastercard and Visa. I mean, that's the kind of impact UPI is making at the ground. And you talked about Eiffel Tower. I mean, again, I met the the international CEO Ritesh Shukla, and he broadly explained the global strategy, and there are 3 elements of this global strategy. One, they are targeting the developing world for deploying UPI and the RuPay card. In early 2000 we saw China came out with the Union Pay, and today if you see Union Pay is one of the biggest card issuer in China. There are many countries in developing world, they need their own card. They don't want to depend on Mastercard and Visa. So one is the deployment of UPI and the RuPay in the developing world. Second, they are targeting countries where the Indians travel, Europe, where the Eiffel Tower, tie-up comes in, or even the Southeast Asia. So this is the P2M, person to merchant transaction. Third leg of their global strategy is the remittances market, the Indian diaspora. So they, just like UAE, Singapore, Malaysia. So the third leg is the P2P, where the person to person transaction will happen. So the developing world, where they want to deploy the entire UPI stack, the countries where India travel, that's for P2M, and the remittances, P2P. So it's not only in India, UPI is now going global.
Okay, UPI is going global in the truest sense, and Dilip Aspi, the MD and CEO of NPCI, has told Anand that in the next 2 to 3 years, he expects to surpass the combined transactions of both Mastercard and Visa, and that's going to be huge, a billion a day kind of transactions taking place. But where do you foresee the growth potential for the UPI emerging from now onwards?
So the biggest driver which I see for UPI going forward is the credit on UPI, and there are 2 elements to it. One is linking credit card with the UPI, and for the RuPay card it has already happened. The global network like Visa and Mastercard, they are currently not on board. Okay, so that's where you can you can link your card and you can scan and pay. But the biggest driver which is going to come is the credit lines on UPI. So RBI now has allowed banks or the regulated entities to offer credit lines on UPI. So you don't need a plastic here. Okay, bank based on your payment will give you a maybe a small ticket size kind of a loan, and then you have the entire the universe of QR codes. So today we have around 30 to 40 crore QR code, vis-a-vis around less than 10 crore POS machines. So there is a huge infrastructure, the acceptance infrastructure which is in place. Okay, and credit, which currently if you go to any bank and credit card has their own underwriting standards, but tomorrow people will get, let's say, 10,000 or maybe a less than 50,000 kind of a credit on UPI, and that's where I see a huge growth, because credit is highly underpenetrated, and that's where the biggest growth will come from going forward in the UPI.
Okay, exciting times ahead for India's UPI going global. So that's one space that is going to be hotly debated, discussed over a long period of time. And of course, over the next 1 to 2 years, it will be exciting to see the journey ahead as well. Thanks a lot, Anand, for that update. And of course, the other important bit that you actually will get to read in this edition is the Business Confidence Index, the C4 Business Today, confidence index that actually talks to us about what is the sense that we are getting as far as the economy is concerned, concerned? What is the kind of confidence that India Inc. has at this point in time? And this is as far as the October to December quarter is concerned. And Surabhi has helped this story. Surabhi, at a time, it's an all-time high for the business confidence index. What are the reasons for this? Tell us what's really happening. Is it again what the stock markets have been banking on, because they are at record high levels? They are anticipating a political stability, a policy continuity. Is that the key reasons why the business confidence index is at an all-time high?
So I think that's partly that, and also because the economy has been doing well, the fundamentals are well, and so I think businesses think that what the kind of growth we saw in the first half of the fiscal, that's going to stretch into the second half also. So if you look at the high frequency indicators, whether it's GST collections or digital payments or anything, everything's been going been going well, and every month we see a new high being touched by these indicators. So it shows that overall the health of the economy is doing well. And let me also give you a bit of background on the BTC for Business Confidence Index. It's basically a set of questions which we ask about 500 CEOs and CXOs across the country in 12 major cities, just to gauge their understanding of the economy and how they see their businesses faring. So in the October to December 2023 quarter, it came at about 56.5, which is the highest since the first quarter of 2015, when it touched 57.5. After that, the BCI has been going down almost every quarter. So it's quite a refreshing thing to see that businesses are doing so well and they're so optimistic, and most of them think that this optimism will also continue in the fourth quarter. So most big size businesses and if we look at sectorally light industries, these are the ones which are the most optimistic.
Okay, but are there any pockets of worry as well? What has been reflected in the index this time?
Yes, there continue to be pockets of worry. If we look at micro industries, then their business confidence remains a bit subdued because, of course, we've seen problems with their recovery. Then hiring sentiments also remain subdued compared to the other indicators that we're seeing in the survey. And on specific questions that we asked, there were concerns regarding rural demand and consumption, because obviously the rural economy is going through a bit of a challenge, and there are worries about how it's going to do. Agriculture sector growth is seen to be relatively muted this fiscal. Similarly, with elections coming, there's also a bit of worry that government capital expenditure is going to come down, although the government and finance minister in the interim budget has indicated that this is not going to be impacted because of the elections, but there tends to be a sense of worry on this. And also there are worries about the ongoing global slowdown and how it will impact exports and demand. So that's another worry that a lot of respondents had.
Okay, some of the concerns which will be continued to be monitorable as far as the economy is concerned, but right now the confidence is at an all-time high, and that's a big positive right there. Anand, apart from this, there are several other important stories that have been covered in this edition. The other story I think is on Paytm, and that's the hottest topic that everybody wants to know what's happening with. Tell us, of course, we've been looking at newer tie-ups happening as far as Paytm is concerned. They announced a tie-up with Axis Bank, but and of course 3 days in a row we've seen an upper circuit back coming in on Paytm again after a 50% slide post RBI's restrictions on Paytm's Payments Bank. Tell us, what is the way forward? Is there a hope that Paytm will be able to revive from these lows? What is your sense?
So Sakshi, I think first of all we have to understand the entire Paytm the business model or the structure. The OCL, that 197 is the holding company for Paytm, and within that they had Paytm Bank, where the OCL was holding 49% and the 51 was with Vijay Shekhar. So all the problem which we are seeing in the market is with the Payments Bank, not with OCL, and OCL is a listed company, as you know. Now what is left with OCL? Let's say tomorrow if RBI supersedes the bank, or if the bank goes away from the Paytm world, Now OCL is into lending, mostly into distribution of loans, for NBFCs and maybe for the banks. So, but they have some tie-ups. So they are more, they are just a distributor of loans. So loan business will continue. So that's where they have postpaid. You must have heard, buy now, pay later. Now this is one product, which sells like a hotcake in the market. So they are big on the this buy now, pay later. Second, they also give personal loan. Again, they have tie-ups with the NBFC, so they arrange loans for the NBFC there, and they earn a distribution, commission or a margin. So the personal loan segment will also continue. Third, in the last 2 years, the PTM was building, high ticket size, personal loan again on the loan segment, because they have a huge customer base, and they have seen where customers have taken loan. So they have a credit history of those customers. So they have whitelisted, some, I don't have the figure right now, but a set of customer for, let's say large ticket size loan. So the loan business will continue. That's number one. Number two, they are into the distribution business. Again, I'm talking about the OCL, not the, the payment bank. OCL is also into the distribution, like distributing insurance or mutual fund. They have a PTM money where they are also a discount broker. Okay, so these activities will continue, but we have to see, what happens, because now, in a way, they attained there, from the regulator talking about, persistence, compliance failure and all. Let's see whether the partners tomorrow will continue to associate with OCL. Will they review their partnership with the OCL? I don't know today. But I'm sure there will be entities which will review their partnership with the OCL going forward.
Okay, well, with that, thanks a lot, Anand, thanks a lot, Krishna, and thanks a lot, Surabhi, for being with us onto this special edition and detailing for us the exciting list of stories that investors and viewers will get to read as part of this very special edition. In case you still do not have this copy, please do go out there. It's already on the stands and you can grab your copies. I'm excited to read this edition, and I'm sure you will also enjoy as much as how Anand, Krishna, and Surabhi have enjoyed writing it for you. Many thanks, ladies and gentlemen, for this special edition and joining us here. But do stay tuned on to Business Today TV as action follows on your screens even after this.